Hello guys, welcome back to today's session. So before we start, just a request from my side. You see, I'm setting up a target of 1000 subscriber in this channel. That will encourage us to put more such content that we are currently putting. As I can see, so you guys are watching the videos and also liking it, but I think you are not subscribing to the channel. So please do subscribe our channel and share among your friends. That will help you and your friends as well. So back to the topic today. So we are going to start a new topic called tax code determination and its associated rules, which is called tax rules. So we will talk about the topic, we will do a practicals as well, and we will see how these tax rules are associated with the tax jurisdiction, and based on the jurisdiction how a tax code is applied, which will be applied to the customers for the billing of the consumption. Okay, so yes, then let's start the video, and again please do like, subscribe, share and do comment us. Let's start the class. Thank you.
Okay. So let's start. So we already discussed about account determination, and account determination mostly used at our contract account level. So at the contract account level, what we do, we put account determination, and that account determination link to the main transactions, sub transactions, and it's linked to the like the business area, and that's how it will connect a posting area details. Now you can see here the business transactions. Whenever we do, we have a main transaction. Here in this example, there is a example of 0040. And in contract account, we have company code, we have division, we have account determination, right? So now this account determination, company code and main and sub transaction linked to our GL, general ledger. But that's okay. Even if you remove that account determination ID, it can connect to the GL. But why the SAP give a new kind of stuff that is account determination? And the answer is to define which kind of general ledger you want to allocate. So let it be, as I mentioned, through billing class, we understand which kind of business it is, whether it's a industrial customer, domestic customer, or a commercial customer. Similarly, from account determination, we understand it's a commercial general ledger we need to define, or a industrial. So that general ledger is defined through a key, and that is called account determination key, right? So other stuff are same. The company code will not change. The main and sub transaction, mostly they are predefined based on the practices of the business. Now only key we have as a consultant or a configure expert, that account determination, and through that we distinguish which kind of business that is and which ledger we need to link that. So that's how we use account determination. So here there is an example of sales revenue accounts. So now we need to create a account determination which will link to the sales and revenue account, and it will directly hit to that GL. Okay. So we already discussed all this stuff, how we define the account determination. Now today's topic is tax code, how we do a tax coding, tax determination. Now when there is money involved, when there is incoming and outgoing funds, so there should be some jurisdictions, there should be some law. And when law come, so they, with law, they will bring the taxation. Now taxation is one of the most important for a financial perspective, because that is directly linked to the legal stuff. So that's how, when the fund will come, how much tax we need to deduct. So that need to be configured into the system. Now we already know how to define the general ledger, but when we're defining the general ledger, let's consider the general ledger only holding the base amount. Base amount means, let it be, we sell the energy to some customer, and based on that energy, 5 unit of energy, he paid around 550, out of which 500 is the base amount, which is in favor of the energy cell, whereas 50 is the taxation on top of 500. Now, when the incoming payment is coming, we need to divide the base amount and the tax amount to put them into separate ledgers. So in that way, we can understand how much incoming is coming, how much base amount is coming, and how much tax we need to pay. And to do that, we need to introduce a new kind of a key that is called tax code, right? So now here in this picture, you can see we have all the same thing, transaction determination, how we do the account determination, and that linked to the sales revenue. And in sales revenue, we are introducing E1. Now, E1 is your tax determination, which define how much percentage we need to deduct. That E1 is configured in background with a specific calculation. That calculation will define how much percentage we need to deduct from the amount, from the base amount. So let it be here, you can see tax code A3 is linked. Now that tax A3 is of 16%, which is linked to the tax determination ID, which is E1, and that tax determination linked to the to your invoice, okay, and to your general ledger. And that's how you can see we have a tax determination and we have account sales purchase tax code, right? Now you can understand we have two major stuff here, tax code and tax determination. Tax code, which is defined the percentage, right? P010010 tax code, okay, whereas tax determination is linking on the calculation part of that. Are you clear? What is tax code? Tax code is raw calculation, you can say. Here it is A3 defined to the 16%, and tax determination is linking that raw form to the invoices. And all these details are stored in a table called TE011. Okay. Let's move on to the next now. So when we define a tax code, or in India, we have currently GST. So we define that GST code. In Europe, they have VAT code. So we need to define the jurisdiction code. Now, jurisdiction code is something like in which country you are doing the business. Okay, based on the jurisdiction code, which we define when we create the business partner. So if you recollect, you can recollect there are jurisdiction code at the address level. So in jurisdiction code, actually, we understand for which law it is applicable for that country. Let's consider in Europe, in European Union, all the countries follow the same jurisdiction code, that they follow the same kind of VAT and taxation. So they will use a same jurisdiction code. Whereas in US, even if it is single country, but there are 50 states, so each state has their own jurisdiction code. Now, based on that, the taxation would be different. Like in India, central government is trying to make all the taxation to a common ground, which would be the GST. So they introduced 12%, 16%, and 18% of GST for services, goods, and manufacturing units. But even if that is applied, some of the states have their own regulations, okay, particularly on the petroleums. That means in each state there are different jurisdictions. Now, if there is any jurisdiction which is applicable across the India, particularly utility segment, so all are 18%, so we can use the same jurisdiction code. If let's consider India as a country has a policy, and let's West Bengal has a state has its own policy, then we need to define the jurisdiction code, and based on that, we define the tax determination. Okay, so you can see here there is a new component added with the tax determination, which is jurisdiction code. Now, jurisdiction code then the key and the raw percentage, 18%, 3% or 1%, and we link to the tax determination E1 and we allocate that to our invoice or incoming payments. Okay. So if you change the jurisdiction code, it will impacting your determination ID, right? So in that case, we have multiple entries for tax and jurisdiction into the table. And if we need a customization, we also allocate that. So based on the different conditions, the tax determination ID will be different. But mostly it is static in nature because the direct linking are there. Okay. So before going into the configuration, we need to understand why we need this tax code, tax determination. Why not a single allocation will be enough for us? Okay. Now, when we do transactions, okay, during the transaction only, we define the general ledger, right? Now, we do a transaction and we allocate, there is a payment lot kind of stuff we are executing. Payment lot means where we collecting the money. So when we started the execution, the transaction is started and we go to all these items, company code and account determination. So we got the main transaction here in this example. From the business transaction, we have 100 and 110 as main and sub transaction. We have a company code U100 and we have account determination ID 01. So all these things dynamically determine the general ledger where we post the amounts. So that's how we also link the tax code at the same label, at the general ledger label. So we can divide the amount into tax amount and base amount. That means we are not allocating here somewhere at the contract account level, but at the general ledger level. Okay, so when we are creating the general ledger, at the below, we are allocating a tax determination ID. Now, we can't allocate the percentage there. Otherwise, what will happen, if we need to change dynamically that account determination, we have to change that calculation dynamically. So it is easier to allocate a tax determination. And apart from that, through tax determination, we have a starting date, end date, and a jurisdiction code, which is involved to define a correct tax determination. That's how we define the tax determination at the GL level, whereas we configure them before that. Okay, because it involves multiple parameters, and multiple parameters, if we configure or if there are provisions to configure at the GL level, the whole GL process will be very complex in nature because already there are a lot of configuration at the GL level. So that's how we define a tax determination ID. Now this whole diagram, any questions? No? So if we go to the definition, how we taxation. So the definition of taxation is come from the open items. So now, what is the open item? So the open item which need to be paid or the amount we need to collect, that is called open item. Okay. So this is the method of SAP ISU used to record the financial transaction on a customer's account. So each customer has their own open items. So in open item accounting, we allocate all these line items. And when we allocate, we have also need to add the taxation to there. Okay. And this taxation, in some cases, it may be happen on the payment, one-time taxation, maybe monthly. Some taxation happen yearly as well. So based on the utility company, the exercise of taxation is happening. Okay. So now, the next target is tax rule. So how we need to allocate the tax rules, that is the major task here. Tax rules actually define to different jurisdictions. Here in this case, we consider the example of the UK, like British So they defined some tax rules, and during the allocation of the tax rules, one of the rule is rounding. Okay, so rounding rule, when we do invoice, we apply that. When we apply the taxation, also we apply that. So let's consider we calculated some amount of 7.8979. So should we deduct the last two digits? So that's how we consider, or should we do its rounding up, rounding down? So those things we need to allocate during the tax rule allocation. What more we can allocate? We can allocate some regulations as well, like somewhere if there is some industry and we allocate, if somebody is consuming, some industry is consuming 33 kilowatt in this example, they should pay some less tax. If somebody is consuming more, like here 145 kilowatt, they have to pay some 0.5% more VAT. So those rules also we can allocate. So in that case, we have to put some conditions at the config level. Now, if we proceed further on, we can allocate, there are, in UK, there are climate change levies. So if somebody is using gas, which is a non-domestic customer, we can allocate some extra taxation on them. Okay, maybe in some days India will introduce, like, there are taxation on non-green energy. If you are using green energy, you will pay less. If you are like the power production units, the energy production units, so what they use coal, they use natural gas to produce electricity. In that case, government will charge more taxes on them. Okay. But if somebody is using green energy, like sunlight, like hydro energy, like wind energy, so solar, wind, all are green energy. So they should not allocate any taxation on them. So those tax rules also you can allocate at the tax level. So like that, you can allocate some other taxation, old house tax. If there are some countries, like some countries, they have, if the house is older than 20 years, they will put more tax. Okay, why? Because if it will be older than 20 years, the energy consumption will be more, because it will be not, particularly in Europe, because all the houses are made of wood. So if the house is get older, then is a depreciation value of that house. So they will put more charges for that. If the house is older than 30 years, more taxation would be there. So they are promoting the people to make new houses. So that's how all the tax rules you can apply. Now, once you apply the tax rules, the major impact would be on the line items and discounts. Why? As much as rules you are applying, you need to hold those rules, or you need to show those stuff to the customer. Okay, and to show that rules, you need to put either as a text format, or you can put them in a calculation format. So most of the time, what we do, we add all the taxation, and finally we put them into a back side, like all these rules are there. So that's how you have to pay. Otherwise, there are some tax exemption or tax irrelevant taxes would be need to be removed. So that's things we can do, like in British, there is tax exemption for the royal family. Okay, or the charitable organizations, or some government organizations which are linked to the royal family. So they are not getting tax. So tax exemption codes we can use also. So mostly we use like similar to tax determination code, we use the tax exemption code. If that exemption code will be used, like in our example, we are using E1 or we use a E0, that means it would be zero taxation. Tax irrelevant, that means let's consider there are two, three line items. One line item is tax irrelevant, particularly the late payment surcharges. If some line item is having late payment surcharges, we should not put tax on top of that. Okay, so tax irrelevant code also we create. Now, if anything is write-off and that is not clear from your open items, okay, in that case, there will be again taxation on top of that. In that case, we also create another write-off or write-off recovery tax code. Okay, so all these scenarios we consider during the configuration. Okay, now you can see what we are doing till now. We are doing company code, account determination, division, main transaction, sub transaction, and that link to the tax code. Where it link at the general ledger level. You can recollect the diagram. Okay. So the tax rate and code determination, how it will be done. You can see at the business transactions, we are getting the main transaction. At the contract account level, we get the business partner. At the contract account level, we are getting the company code, the account determination ID, and division. All these three things we are getting. Okay. Now, the transaction is happening on this person, on that business partner. And through account determination, we link them to a ledger. Okay. And through that ledger, we understand that is a tax code inside the ledger. And it is when the amount will come, automatically the determination happen and the calculation happen and the posting will happen. The same stuff. Now, if you want to introduce some exemption code, you can introduce at the facts level, okay? Or you can create a tax determination which will be allocated here with a tax rate of 0. That will be also exemption. Okay, both are same. Okay. Now, this is tax business process. Somebody provides the energy and the invoice generated, that invoice go to the person, that person calculated the, that person, whatever the base amount, on top of that we calculated the tax amount, and finally we send that invoice to the person and we collected the money, revenue, right? And this, the whole process is completed. Okay. So invoice to tax determination. Okay. Now these are very means not much required. Okay. Again, it's showing the same stuff in a calculation format. I'm looking for the point tax reporting, tax base amount, yes. So here you can see all the taxation details are here. Now first is specify the tax jurisdiction. Define the tax jurisdiction, it's linked to your country. Okay. Now it's directly asking the costing sheet. Now costing is from the control people. So here you can see multiple things are there, but that again, a CO part. So from when we'll get the system, we need to define the tax code only. No taxation. Now here you can need to add something like randomly, but that need to be integrate again in further stuff. So you can see here the type of taxation. Now the tax can be of multiple types. Like if you understand GST as well, so when somebody is buying something, there will be tax on top of that. When somebody is selling also, there will be tax. So taxation is of input or output tax, right? And or additional tax on top of that, there may be some additional tax. And if you're creating something for non-relevant taxation, that also you can create. So there are 4 options which are predefined into the system: output tax, input tax, additional tax, and not relevant tax. Now, if we consider input tax, like we are collecting, okay, it will become with 02 type. Now, then you can put some description there. Apart from that, here you can see there is a posting indication. So if you are creating anything which are statistical in nature, means that need not be posted into the GL, so not posting required. So that tax will be calculated, but the posting need not to happen. Why we do that? Because in some cases, we just keep that for our record. Like somebody is getting tax benefit, but after a certain time, let it be one company got a tax benefit of 5 years. Right, after 5 years, that company need to pay the whole tax for the 5 years. In that case, we are not posting there, but we are calculating them. Or if you want to calculate your this particular tax, what we are introducing, the additional tax into a separate line item, you can add that. Okay. So that's how there are 3 indications as well. Now I'm putting some process like ORT process or it is tax. Okay. So now we'll go to the jurisdiction for which country you need to allocate that. So we need to create. So we know our country would be like India. So let's see. India sell tax. So I'm trying to explain that we need to allocate the country, the tax based on the tax of that country. We need to allocate the scheme. And here, so what would be the length? Like length after your decimal point, all those stuff you can define here. So all are length only. And I'm not defining anything. If you want, you can define your own of length. Like mostly, most of the cases, it is defined as 622. But anyway, maximum up to 15. Okay, so I'll put like first would be 5, then it would be 4, 9. Okay, now it can actually be said. Mm. Now, whatever we defined, we didn't define anything. Okay, let me take something. Now, this is again part of CO where it is allocating a tax jurisdiction for, as I mentioned, within India also you can introduce different taxation, tax jurisdictions. So that's how you can introduce. Here you can see within India, there are India, Maharashtra, India, Karnataka for different tax jurisdictions. IN01, IN02 like that. So if I'll put like 4, it will allow me something. Percentage or any code, 18% or means, or any code, it will allow me. So 2, 12. Okay. All right, so that's the tax jurisdiction code. Let's move to the next one. Message control, it's again based on your practices, you need to allocate field control, define the external tax calculations. The refund is, now we need to allocate the tax determination. That is our target actually. So, tax code I should put. On receivable and payable, now here under withholding the tax, you can see tax withholding tax code. Here we can define the tax code, and that we need to link to whatever we created the base taxation. Okay. Now same stuff, you need to go to new entity and allocate the control areas. Control areas here you can see for the tax code is already mentioned that these are the country code mostly. You can see all these countries are there. Now with these country codes, we need to allocate our own taxation and the description. So let's see for India if there is something, or we need to create a new one. IN. So in India already you can see we have taxation based on our system, for insurance different, for invoicing different, right? Now, if you want to create something your own, then also you can able to create by your new entries. So W to W5, all are Indian. So we'll go with the contract invoicing, W1. It's okay, or should I create something new? It's very simple. Go to there, create the country code is IN. Now here you need to put percentage. As I mentioned last time, in tax code, we put a raw percentage and it will be calculated on top of the base. Okay. And I'm just putting 5%. Save it. Okay. The new tax code is created. And I'll put the description. I can put the description. Tax code. Code is ORT. Okay, the data was saved and a new tax code is created. So I'll go back and now you can see the tax code here. Where is I? Yeah, it's coming blank. Oh my God. But okay. Actually, withholding tax, I didn't put anything. So that's how it is showing blank there. Anyway. So that's how the tax code is there. Define additional specification vendor tax. Uh, Probably I'll leave it to you. You can come to the system, you can explore, and one by one you can put tax and tax determination. If you want, you can put all these codes and check what is actually happening here. Is that okay? Now you need to explore this, what is withholding tax, and then you can go to each of these tax part. I came here just to defining the withhold tax for tax code, right? And that tax code we need to allocate in our tax determination. Okay. Now, if you go to the master data label, in the master data label, whenever you create the contract account at that time, this withhold tax code, it will ask. So you can allocate the withhold tax there. Okay.